Hello and welcome to Market Watch for November the 6th, 2017. Bit of admin first, don't forget that tomorrow is Melbourne Cup Day, so Victoria is away for the full day for a public holiday. It also means normally that today and also tomorrow are light volumes anyway. A lot of Victorians take the 4 days off. It also filters through to the rest of the country as well, as that most people concentrate on what happens at 3:15 Australian Eastern Daylight Savings Time rather than what happens at 2:30. And on that, it's around the RBA. Don't expect any movements. If you have a look at the interbank market, there is a slight movement opportunity there, 7%. I ignore that. That's normally a hedge. The market normally does always have just a little bit of a chance priced in. It's not going to happen. What you want to look into is the statement itself. The statement will be quite interesting. There are two things you really need to highlight here. What their view is on America, particularly the US. We saw over the weekend that Trump nominated a fairly well-known fact in Jerome Powell as a next Fed president. But in saying that, you also saw that their meeting last week showed that they're going to raise rates in December. So they want to sort of hear about whether or not they also see the bright spot in the US and what their view around US inflation is. So that might also filter into their thinking. The other side is China. The last quarter of this year and sort of filtering into the third quarter, they did note that China was just slowing down ever so slightly. So watch their statement around that, and therefore you can sort of bring an inferred meeting into 2018. But that is probably not the main part of what's going to happen from the RBA and Martin Place this week. I'm going to jump ahead and look at what happens on Friday. The statement of monetary policy will be really quite huge in terms of what it sets up for next year. The last one they released, they did downgrade inflation and GDP by a notch, so 1/4%. Ranges for inflation for the end of next year actually moved down slightly to 1.75 to 2.25%. And if you have a look at GDP, they downgraded it from 2.75 to 3.25% to actually looking at 2.5 to 3. Do they move each of those again lower still? That's a big question. If they do, that therefore brings on the idea that you're actually seeing the possibility that the RBA was slightly ahead of the curve. Their neutrality may have been overdone, and they might have to turn a little bit dovish as well. Want to then also transfer back to looking to the region. China is a big part of what was going on. There was a very, very interesting chart that came out this week that showed, if you have a look at our exports in terms of where they are, China is still an absolute country mile ahead of everything else. And it's actually quite interesting to see who those other countries are. Look at places like Korea. India is actually also coming up, but they are a long way away. So you always have to look at Chinese data. Two pieces this week. I'll start with probably the lesser one, which is their inflation data. It is also not maintaining the kind of levels that they would want. That's a global phenomenon. The question is whether or not you see the PBOC coming through and doing any form of changes. My theory and my sort of speculation is that they won't. We know what happened with the People's National Congress a couple of weeks back. They are trying to get financial stability, so I don't expect them to stimulate like they have in the past, but inflation isn't reaching it. The part that really will affect us happens on Wednesday, and that's their trade balance data. Their trade balance data last month was quite outstanding in terms of an Australia-centric point of view. They had a 19.5% increase in imports. Don't expect that to carry through. We did hear in October that they were already slowing down leading into the PNC. And with that in mind, it may therefore also filter through that the exports are really strong, filters through to their actual trade balance really moving out. That's a positive for them, but it may actually be seen as a bit of a negative for the Australian market as they slow down on demand, particularly for things like bulk commodities. So keep an eye out for that as well on Wednesday. Finally, very quickly, it is the first real week of a month, and therefore there are a whole heap of central banks. Last week we did see the BOE moving for the first time in a decade. However, you saw the pound get absolutely towed up on the back that they're not likely to move at all pretty much in 2018. The ones to watch this week are actually the economies as similar to ours as possible in the Bank of Canada and the Bank of New Zealand. Now, the Bank of New Zealand has a new government. They clearly have a slightly different mandate now with regards to what's happening with their housing, but just watch them. There had been rumours that they could actually move rates. And the Bank of Canada is always the interesting one now, considering that they actually surprised the market this year by moving on rates. No one expects them to, but at the moment they are the surprise packet. And the reason I highlight them, oil's been doing ever so slightly better than forecasted. I actually think there's a cap there, but just be aware, if they do highlight that oil's improving and it filters through into their economy, Bank of Canada could actually surprise the market.